Hey everybody, it's Ron Bainberg with another tip of the week. This week, I'm going to go about this a little bit differently because I want to hammer home a point that many of you have heard me say before. The point that I want to make is that we've got a lot of amazing experts, both within the industry and outside the industry, and that I want you to listen to them. I want you to understand how they analyze data. I want you to learn as much as possible. But what I cannot stress enough is you cannot make decisions about your future based upon anybody's predictions. And this is not disrespecting anybody. It's just that making predictions into the future are getting harder and harder and harder because there's so many more things in a globally connected world that we've never had like this before that make using patterns in the past basically a waste of time. There are too many things that can happen, and most of the things that are causing interest rates to move in ways that we didn't expect is based upon events or data that people did not predict. I can start all the way back in 2021, okay? And please understand, my predictions would be no better. 2022, January of 2022, where interest rates were supposed to hit 4% by December of 2022. They hit it by January 31st. Nobody predicted it. Nobody saw it coming. And then everything that transpired after that, nobody had predicted the slowdown in the markets. Again, not faulting anybody. Things happen. But I want to just continue this because we can keep looking past. And I just wanted to really prove this point for your sake that I want you to stay focused on what you can control. Last week, the JOLTS report came out. The JOLTS report stands for Job Openings and Labor Turnover Survey. Okay? The JOLTS report actually came in unexpectedly higher, showing that openings increased, they didn't decrease, which is what everybody, let me just fix my mouse here, what everybody was expecting. They were expecting layoffs to increase, and in fact, what happened is, you can see it on your screen, layoffs decreased. Okay? So people missed the mark. I get it. ADP came out with the private payroll report. Came out much better than expected. Average predictions were somewhere in the area that 170,000 jobs would be added to payroll. Well, blew it away by over 100,000 and it came in at 278. Now, there are some of you naysayers that say the ADP report's never right. Well, you know what? They've been getting it a little bit more accurate. And in fact, their prior report, their initial report, and their revised report only changed by 5,000. That's a pretty good record. That's a pretty good indication of how accurate they were, at least for last month. So let's just not discount this, okay? The Labor Department, experts and analysts were calling for an increase of around 190,000 in new jobs. 339,000 blew away everything. So here we have three reports that immediately changed the way investors were thinking, it changed the way the bond market was operating, changed everything. Why? Because there are just too many things that we can't get right now. Now, that was the 29th month in a row of positive growth. Okay, so look, anytime we're adding payroll, it's going to be positive, okay? So that's a good thing. Recession, people keep talking about a recession. If it's going to be, the sky was falling last year, we're going to have a major recession. Right now, they're talking about, they don't even know what kind of recession we're going to have. I don't know either. Let's continue. If you've been listening to anything about travel, there is no sign of any decline in travelers willing to pay what are some of the highest airline prices that we've seen in decades to travel, to take their families on vacation. There's still so much pent-up COVID demand that people are just getting out and doing what they want to do. That's one of the explanations. I don't have all the explanations, but I want you to understand that people are still spending money. People are still traveling. Interest rate movements, they went up for 2 weeks a couple of weeks ago. Then the budget deal, all that uncertainty was helping lower some of those interest rates. Then a budget deal is signed, the bond market rallies, and then the next day what happens? Rates go up again. And we've had a couple of days now in which rates have risen. Nobody's predicting this, and a lot of people are scratching their head. A lot of the experts, including myself, are scratching our heads trying to figure out what is going on here. Okay? Now let's talk about some of the unknowns. What's one unknown? Well, OPEC plus. We just had today, or yesterday, Saudi Arabia said that they are cutting production by 1 million barrels a day. Now, that has not moved the markets much, but nobody predicted that the Saudis were going to do this until they really started talking. So there was really little to no advance notice. Are other countries going to follow? We don't know. But if oil prices go up, what do you think that could do to inflation? By the way, let me stop here for a second. I am not trying to scare anybody. I'm just trying to give you a dose of reality because I'm the type of person that wants to focus on what I can control. Because if I can control it, my actions are going to dictate how I'm going to take advantage of what's happening. Let me just give you a couple more little things here. I don't know if you ever heard of this, okay? This is not mainstream media yet, but it's coming. Gatun Lake. Gatun Lake is the freshwater lake that feeds the Panama Canal. Now, unless you've really looked for it, you don't really know what's been happening here, but Gatun Lake in July is expected to be at the lowest level in history for that lake. What does that mean? Well, here's what's already happened. There's a massive drought down in Panama by the Panama Canal. There are now limits on how much of a draft. Now, I'm a boater, so if you don't know what a draft is how much of the boat can go below the water line. And if water levels are low, they have to reduce the amount that a boat can go down, which means they have to impose shipping limits. They have to reduce the amount of weight that can go on a ship because otherwise it'll cause the ship to be too low to go through the canal. But it still costs now more to ship a boat through the canal or a cargo ship through the canal than it did years ago. So higher shipping fees are now being charged for less product being moved through the canal. So now companies are starting to look for alternative ways to get goods to the United States. Okay? Now, what does that mean? Every other way is going to cost more money. Why does everybody want to use the Panama Canal? Because it is the cheapest way to get goods into the United States, especially the East Coast from Asia. So again, I'm not the expert here. I'm just telling you what I am seeing. And all this does is create uncertainty. And then there's this one. I don't know if you've heard of this guy, El Nino. Okay? El Nino, which usually brings historic rains or torrential rains or extreme drought. Well, history has shown that El Nino, whenever it does occur, that weather pattern, there's even greater droughts that occur in Panama. So what that means is all of this could converge on massive pressure for shipping costs in the United States, causing inflation. If you cause inflation, the Fed cannot do what they want to do. They have to keep raising rates to try to quell inflation. We still don't know what the Fed's going to do. Just in this past week, we've had 3 Fed members or 3 board members saying that they don't feel that the rate hike should stop. They're thinking there should be a pause in June, but they're talking about more rates in the future. How much? Who knows? What is my point here? My point is, I want you to learn not from me, not about the markets from me. I want you to learn from the experts. I want you to listen to them. I want you to pay attention to them. But I don't want you to think that what anybody says is gospel because they're just not getting it right. What you have to do is you've got to focus on what you can control. And what you can control is your prospecting, it's your relationships, it's all the things that you need to do in order to build your business. And being a coach, being a trainer, I talk with a lot of people every week. And so many people are talking about, well, do you think the Fed's going to do this? Or what do you think the market's going to happen? I don't care. Because I'm going to make it one simple question for you. Are people buying homes? Yes. Are people selling homes? Yes. Are the numbers significantly lower? Yes. Mortgage origination was the lowest in 20 years in the first quarter of this year. That report just came out. So what do? We can let those that are unwilling to prospect, that are unwilling to take control, are unwilling to make the decisions to take those actions, they may not be here. I actually spoke with a highly regarded industry expert today, who actually told me, and he works with major corporations in consulting on financial matters. And he actually told me today, about an hour and a half ago, that he believes the worst hasn't even come yet, that many more companies are going to consolidate and struggle. Now, I don't know if he's right or wrong. I don't know. What I do know is that if I'm an originator, I'm going to keep prospecting, 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 because all you have to do is look at that. There are some originators out there that are still rocking it. They're still doing a lot of volume. They're still doing a lot of business. And the difference between them and everybody else is that they are very deliberate in the actions that they take to prospect and grow their business. And that is the thing that they can control. I imagine this message is going to irk some people. Some people may not like this message. It's a reality check, ladies and gentlemen. And those of you that know me, you know that when I put something like this out, it's coming from my heart because I have no other agenda here. My agenda here is to make a difference in your business, and I want to make sure you take control of what you need to take control of. I know this is a longer tip than normal, but I wanted to give this to you because I'm hearing too many people that are listening to the wrong things and focused on the wrong things, driving them to take action on the wrong things. Take care, everybody. I'll see you next week. And I promise you, next week, we'll be back to our normal, much shorter videos. Take care, everybody.